Yo, what's going on, guys? Welcome back to another video on the channel. In today's video, we're going to do our Sunday technicals, look at the NASDAQ, look at the Dow, check out the SPY, and then go over some individual stocks, look at some stocks that I'm watching into next week for potential plays, and then we'll also go over two stocks that I'm currently in swing trades on. As you guys may know, the futures open up at 6 p.m. every single Sunday, which gives us some type of indicator as what may happen starting the week. Now, obviously, we could have a red futures and a really green Monday, so don't base your decisions off of the futures, but it is something to keep an eye out for, and I'll show you the tickers that you can watch if you guys are not familiar with tracking the futures contracts. So as always, to help me grow this channel, to help me get these videos out to some other viewers, if you've been enjoying the videos, it'll really help me out if you smash that like button for me, if you subscribe to the channel, if you want to stay tuned for some future videos, and if you want to know every single time that I post, make sure to press that bell notification. So over the last 2 Sundays, we've been doing these technical videos. Hopefully you guys are enjoying them. I know for myself, I'm enjoying looking at the charts on a Sunday. I don't typically do this, but since I'm making these videos, it has helped me quite a bit. I've been able to look at these charts, sort of digest them, analyze them, look through a few tickers, and see if I like anything. So hopefully you guys are enjoying these. The videos get a little bit long, so let's just go ahead and jump right into this. All right, guys, so we got the charts pulled up. The first thing we're going to look at is the NASDAQ, the Dow, and then we'll pull up the S&P 500. So here is the NASDAQ. The NASDAQ has been getting hurt the worst. The tech sector, we've seen a lot of rotation out of tech into industrials, into the Dow stocks, some recovery stocks, the bounce back plays. So tech has been getting beat up. We've seen that on the NASDAQ as well. It's been dropping the most out of all the indices. The S&P and Dow have been making new highs, and you can see here the NASDAQ is still lagging. So what we're looking at here, the 20-day is the blue line, the 50-day is the yellow line, and the green line is the 100-day. Now, we're at an important level, I think, because the NASDAQ is trying to get above this 20-day moving average, which is just crossed below the 50-day, which could be a short-term bearish sign, which we already know that the short term is sort of bearish on the NASDAQ. We're having trouble at this 20-day moving average, which is at just about 13,100 on the NASDAQ futures. So you can see on Friday, we failed it. On Thursday, we tried to break through, but we failed it as well. So we're definitely seeing some resistance here. So the first thing that I'll be watching for tech stocks before I get into any tech plays is to see if the NASDAQ can open above the 20-day and if it can break above that 50-day moving average. If we do, then the big sign, the big technical level that I'm watching is these previous highs. So it's a little bit of a range. We have a range here from around 13,300 to around 13,350. So yeah, just around 13,300. That's sort of my technical range there on the NASDAQ. You guys can see the bottom of these candles is around 13,311. The top of that candle is around 13,350. So about a 40-point range, which is pretty small when you look at an index like the NASDAQ, but we definitely have some resistance there. So if we can break the 20, if we can break the 50, I would like to see if we can move up into that previous resistance there, almost like it's like a 5 top. 1, 2, 3, 4, 5 times we tried to break above that. We did not, and we failed to the downside. So that is going to be the first level that I'm watching on the NASDAQ. If we can break through that previous resistance there, I think we definitely start to see some momentum, start to see some rotation back into tech, and you can get some plays. You could try to be a hero and try to take some plays into that resistance level. Personally, I don't want to do that because I don't know if it's going to break. It may just fail once again. And if you don't manage your positions correctly, you could get stuck in that failed breakout of that previous resistance. So let's go ahead and see. I do like how we held the 100-day here. We had some nice consolidation, held the 100-day. We're moving back up. So next week is going to be a pretty important week, I think. Will the NASDAQ break through these levels, or will it turn right back over into the 100-day? That is something that we definitely have to watch. Now, on the other hand, the stock or the index that's extremely strong is the Dow. You can see this is totally uncorrelated to the NASDAQ right now. So we had our big drop in March, and we've been just continuously going higher. And in the last week, we have been making new highs, which is absolutely crazy to think. But we've had some really nice bounces here on the 50-day, here and here. And on the most recent drop that you guys saw 2 weeks ago when the stock market started to get into some panic, we can see we recovered extremely nice. And we've had almost 6 straight green days on the Dow. So this is why I'm in some Dow swing trade stocks that are heavy in the Dow. One is Home Depot that you guys have seen on the channel, which is working out extremely well. We've continued to see that Dow strength. Now, I want to play devil's advocate because I do expect the Dow to lose a little bit of steam here. I don't expect it just to continue to go straight up. So if we see a bounce back to the 20-day, I would not be surprised at all. If we get that move back to the 20-day, I definitely think it sets us up for some opportunities on some strong Dow stock. So we see the outperformance on the Dow. We can also go to /ES, which is the S&P 500 futures. We did not break new highs on Friday because obviously the S&P has a little bit more tech stocks than the Dow. So we still are getting dragged down a little bit more than the Dow on the S&P, but we have this high at 39.59, just around here. We tried to break it on Thursday. Friday we sort of chopped around, but we are definitely looking much stronger here on the S&P than the NASDAQ. So we broke above the 20-day, and now we're sort of flirting with this all-time high. So let's go ahead and keep an eye on these. The first thing and most important thing, in my opinion, is to see if the tech rotation continues. If it does, expect strength on the NASDAQ or on the Dow. If it does not, and we see some movement back into tech, then expect some strength on the NASDAQ. So as always, guys, we're going to start off with Tesla. That's going to be our first stock that we're going to look at. Tesla has had a nice bounce. We've held that 100-day moving average, so we did drop pretty far below it, but we had that huge 20% day back right above the 100-day right here. So that was definitely a bullish movement. Now, what we can see, which is pretty clear here, we are starting to struggle under this 20-day moving average. So we failed it here. I believe this was Wednesday. We had a little bit of a doji here on Thursday. Friday, we gapped down, but we moved right back into this previous move, and we are still below this 20-day moving average, which is right around $703 a share. So the first thing that I'm looking for on Tesla before I take any bets on this, before I go bullish or bearish, is if we're going to fail or if we're going to break above this 20-day moving average. If we do, then I can see us move back into some of these resistance levels, 720, 740. We're really going to have to play this by ear. We're going to have to wait to see what happens, but I do want to see it break this 20-day if you are bullish on Tesla. I'll go to the 4-hour to break this down a little bit more, and you guys can see on the 4-hour, we definitely are finding some resistance here at the 100-day moving average. So the 100-day is above here on the 4-hour. We are finding some resistance multiple times here at this line. If we can break above it, I think we see some bullish movement. We have some pretty clear previous resistance levels here. This is a previous high at 725. We have one here at 742. And then we have this gap over here, pretty small gap, but we have it around 765 and 780. So we have definitely some important resistances above us. So let's wait to see if we break this 100-day first and if we break the 20-day on the daily chart. I think Tesla can be a great bounce back here. If you catch this correctly, you can make a ton of money. I don't see why Tesla doesn't come back into this potential resistance, previous support level around 780. That is where that gap started here back on the 19th of February. So if we move back here into this gap, I could see that. That could be a really nice bullish movement that you can potentially make some money on. So let's keep an eye on this. Keep an eye on those moving averages. Going back to the daily chart, I first want to see us break this 20-day moving average. So the next one I have for you is Walmart. Walmart has been sold off extremely aggressively. I don't really understand why we had this huge gap down on earnings. That was almost a 4% gap down on earnings. And from this previous high, we have moved down almost 14% on a slow-moving stock like Walmart, a great value stock. I think there is a ton of opportunity approaching here on Walmart. This is definitely one that I'm watching into next week. We found some important support back here where we had these previous levels of chop around 128 to 130. So you guys can see we sort of chopped around here, right around here back in June and July, and we found support there once again on the daily chart, and we bounced right back up. Right now, again, we are flirting with this 20-day moving average. I had some people reach out to me this weekend, or I'm sorry, on Friday and this weekend talking about Walmart, and my response to all of them was to wait to see if we can break above this 20-day moving average. If we can get this 135 break, I think we have plenty of room, and we have this big gap down that will likely want to be filled back all the way up to around 144. So we have potential upside of almost 7% on Walmart, which if you take some option contracts will be a big return. So let's keep an eye on this one. Walmart, if we can break the 20-day, I think we can move back and try to fill this gap. We may find resistance at the start of this gap around 140. Let's just call it 140, 139. We may try to find some resistance here, but if we can break above that, I think we filled this gap. So we definitely have some upside. If I go to the 4-hour, we may be able to see this level a little bit more clear. Right around here at 135, I think is where we need to break. We also have the 100-day there on the 4-hour. So if we get above 135, that will be my indicator to potentially get into some long calls to try to see if we can fill this gap that occurred on earnings. All right, so the next one is Home Depot. Now, you guys, if you've been following the channel, you know that I'm in this swing trade. You may be in the Discord and you may be in it with me. Right now, a really nice return. We got in back here on Thursday. I think we got in on Thursday, and it was right when we broke above the 20-day moving average. Now, Friday was a great continuation through the 50-day, through the 100-day on the daily chart, and we closed above both of those. So I am extremely bullish here on this position. The reason I took this position in the first place was, if you guys see this, we had an earnings gap down. We gapped down. If we pull this wick, it's right around 274, and that was sort of my original price target. So we almost got to that level on Friday. We didn't quite yet, so I am still holding the swing trade, but I want to see if we can fill that gap. If we can, then I'll start to look to take some profits. But I really like this move. We held above the 20. We're above the 50 and 100. And in the most bullish case, if the Dow really continues to be strong, we could potentially see us back up at these previous highs. If we get there, I'm definitely going to get out, because I was definitely anticipate some resistance up here at these previous highs. So a nice bounce play here on Home Depot. Extremely sold off after earnings, well below all of the moving averages. And we had some really nice support that was back here in May and June that we bounced off of. So this was a great textbook play here. This is sort of the plays that I like to see. Big drops, overreactions into support, try to move them back into the moving averages. This was a great play here on Home Depot. The next one that I'm currently in is ULTA. Now, ULTA, you guys may have seen, took a huge hit on earnings as well. I think an overreaction. Here on the daily chart, one thing that you see is this humongous volume bar here on Friday. So that's pretty interesting. A huge volume spike there on Friday. We gapped down all the way to the 50-day moving average here around 309. We got a big bullish reaction off that 50-day, and we closed around 318.15 on the day. So I got in this swing trade on Friday. I'm currently up on the position just slightly, I think about break even. But my idea is that we move up back towards this 20-day moving average, and my price target is $330 a share. If we can move back to that 20-day, these contracts will really appreciate, so I'm very happy with the current entry that I got. If we continue to move and try to fill that gap, we have all the way up to 342, 343. So as of right now, about 7 to 8% potential return here. Or stock movement wise, the option contracts will obviously increase more than that. But I do like this overreaction. You can see we found support there at the 50-day on ULTA, and we definitely have some move to the upside to fill this gap. So I'm definitely going to continue to watch this one on Monday and into next week. So continuing along these gap type plays, here is SFIX. SFIX again took a big drop off earnings. You can see on this day, we moved all the way down about 22% off earnings, a huge drop. And just recently on Friday, we broke these previous lows. So this candle right here, this was on the 9th. The high of this candle was 53.44. So if we put a line here, 53.44 is just about here. Let's just put it at 42. You can see on Friday, we did break that previous high. So we are in sort of a area of no resistance. We definitely have some room here on this gap down. So if we do move back up into this previous resistance, we have about a 27% upside on the stock alone, which would be a huge move in option contracts. So we have some resistance. I would expect resistance at 60. That's the 20-day or the 100-day moving average. And then my next resistance that I would watch is right around the low of these candles, which is around $67, $68 a share. So if we continue to get this bounce back after this huge dip on earnings, I would see SFIX try to break this 100-day, try to move back into the 20-day. But overall, I think this is a good opportunity off this earnings gap down. We found support, and we also found support right here at that previous gap up. So that's pretty interesting. If we look at SFIX here, we can see that we found support right where the previous gap up was right here. So very nice support area there on SFIX, and I could totally see this try to move back up into this previous level of resistance, and that will definitely give us a really nice trade if we can catch this. If tech stays strong, if we get some movement on SFIX on Monday, this will definitely be one to watch. So I have two more stocks for you guys here. The next one is Shopify. Now Shopify, pretty expensive option contract, so don't play this if you don't have the bankroll to play this and potentially lose it. You want to make sure to focus here on risk management. But Shopify, you guys know, is a great stock, great in any type of environment, even in any type of virus environment, one that's sort of going away right now. So I think Shopify has been pretty sold off because of tech, but I love it here at the 100-day moving average. Look at this right here. We've had about 5 to 6 days of consolidation here at the 100-day moving average, and I don't see why we can't get some momentum back into tech, which should help Shopify, and we can potentially see a move back to the 50-day and even back to the 20-day moving average. In the past, we've had a lot of support here at this level, so you can see previous resistance turning into support right here, and again right here at the 100-day, and I could totally see Shopify try to move back up into these moving averages. If we can hold the 100-day, if tech can hold strong next week, then I think we see Shopify try to make a move. If we go to the 4-hour and look at this here, I think we need to see if we can break above this previous consolidation, which is right around 1165. I think what will really put us in the clear is a break of 1170. So if we break 1170 here, we'll get above this consolidation that we're currently seeing, and I think that puts us in the clear to try to move back up into some of these moving averages. So let's watch Shopify. That's a high risk, high reward play. Option contracts are pretty pricey, but if you guys see this, look at this previous resistance, look at this support that it found, and then look at where we are right now. We could definitely see a support bounce here, and if we catch it, big returns on Shopify with option contracts. So finally, Royal Caribbean, you guys have seen some of the overperformance in the cruise lines, in the airlines, in the comeback stocks, and I love Royal Caribbean here because we are right at this previous, right at this 20-day moving average. I'm going to go out to the 5-year so we can see the bounce or the drop in March due to the virus. So some levels that you want to watch pre-virus is right here around $100 a share, $101 a share. You can see we had that previous support here that I would expect to turn into some type of resistance when we move back, right here in March and April. So let's first watch this $100 level. We also have that gap down right here, so we definitely know we'll find resistance here. But right now, Royal Caribbean has held this uptrend since March of last year all the way until March of this year. So about a 1-year-long uptrend that's been sort of grinding higher, and we have this upward trending channel that you guys can see right here. So right now, Royal Caribbean has sold off from these highs, and I like how this respected the upside of this trend really nicely. So here, and we sort of broke out here but quickly fell back down. So let's just call it 4 times we found resistance at this channel. Now on the downside, 1, 2, and 3, let's call it 4. 4 times we found support at the bottom of this channel. Now let's see, is Royal Caribbean going to go back to the bottom of this channel and then bounce from here? If it does, great opportunity. So definitely watch Royal Caribbean. If we get a bounce down to the bottom of this channel over the next few weeks, definitely an opportunity. Or if this trade stays hot, if the comeback trade stays hot, we could find support here at the 20-day moving average. So we very well could bounce off the 20-day right here and try to move back up into the top of this channel. So Royal Caribbean is definitely going to be one to watch. I'm going to delete these circles for you so this is a little bit more clear. We can see that we're going to do one of two things. We're going to bounce off the 20-day and remain bullish here on Royal Caribbean, or the stock's going to continue to fall to the bottom of this channel, which will set us up for an even greater swing trade with even higher profit potential. So I like Royal Caribbean. I like the comeback stocks. The cruise lines, the airlines, we definitely have been pretty hot. If they stay hot, I would expect the Royal Caribbean to bounce off this 20-day moving average. All right, guys, so there are some of the technicals that I'm watching into next week. I'm watching the 20-day, the 50-day, and 100-day continuously over the weeks to try to see if I can find some stocks that are sitting at these important support levels, trying to get a bounce, trying to remain bullish. I like these setups. I like buying at these support levels because I have a strict stop loss. If we break below, then I know the trade is over. If we continue higher, I get to reap the benefits and get the price at a really good entry point. So that's sort of my style on these swing trades. I hope you guys enjoyed today's video. If you want to stay tuned, make sure to subscribe. If you liked it, press that like button. If you want to trade with me every single day and know every time I take a swing trade setup, make sure to check out the Discord. It's going to be the first link in the description below. You guys can also follow me on Instagram, follow me on Twitter. I'll make sure to put those links down below as well. Hope you guys are having a great weekend. I hope you're getting ready for Monday. It should be a pretty interesting week. So good luck, make some money, take your profits when you have them, and I hope to see you in the next video. Peace.